Hey folks, Dan Frio here with your market update for March 6th, 2025. So in today's video, we're obviously going to talk about these things because that's the whole point of it. We're trying to figure out what's affecting these things in the news. So in today's video, we're going to talk number of Americans filing for jobless claims falls. Labor market remains sturdy. Well, you look at some other captions and we just had the biggest government layoffs in history. So we're going to see how all that plays out. Next thing is global bonds sell off as investors react to the Trump tariffs. So is that going to help our markets here or not? We're going to talk briefly about that. And then you're a little bit ahead of the curve other than Main Street because we also been focusing in on the word stagflation over the last couple of days. So we're going to tie all this into today's report to figure out what the heck's going on with these things. So without further ado, let's get over to it. So my name is Dan Frio. I do this report twice a day and a live video on Wednesday. Join us live. You can ask questions. But I try to have somebody live each Wednesday help me explain to you guys what's going on in the markets. But every day we do two videos, and I do the opening bell and the closing bell to let you know how all this stuff is going on. And our slogan here is one application, one credit pool. We're going to shop your loan to up to 30 different lenders. Now, how do we do that? Well, it's intriguing, and I'll give you all my information at the end of this video, so stay tuned for that. So mortgage rates ticked up a little bit yesterday. Is that trend going to continue today? Well, over through here, we see the jobs numbers that just came in. We're going to take a quick glimpse at those here in 1 second. So let's get over to the jobs report that we're seeing. We'll go to the economic calendar for that. And here's where the job numbers came in. Initial jobless claims. This is basically the only news that we have out for today. The last reading was 242,000 initial jobless claims. So people lost their job. They expected it to go up to 234. It actually went down to 221. Okay. So, but when all the government layoffs and everything take place, we're going to revisit this because this might spike up because other pieces of the news are telling us this is the biggest mass layoff in government history. So we're going to see how that plays a role in a lot of these things. But could it help government efficiencies? That's the yin and yang behind all these. You go over the next thing. It says global bonds sell off as investors react to the Trump tariffs. Okay, so here's what a lot of people do. Let's just go over and see what the markets are doing right now. So we're going to go over to here and youch. Okay, so what normally happens in a normal market? I've been telling you guys this, and a lot of times it didn't work out in the past because we just weren't in more normal markets. But usually when you have uncertainties throughout the country and throughout the world, like, what's the unemployment rate going to go to? What's our inflation numbers going to do? What's tariffs going to react? How are they going to react to all these things? So when you have those concerns, most of the time people pull their money out of equities, causing this, red across the board. That's what you're seeing. So you have the Dow Jones. Again, yesterday it was up, I think 400, 500, 600. The 2 days prior is down 1,300. So it's like the markets just don't know what to do. If you're an investor, a new investor, here's my thought on this, and I'm not the person to talk to, and don't trade on my advice because I'm not a financial planner or anything. I don't sell into these markets, okay? Because I've learned over time. I'm going to be 60 this year. I learned over time that you if you're in investing, just stay in. It's kind of like housing. You can't buy a house and then a year later sell it and make money. You're going to have to stay there for 5, 6, 7 years. If you're not planning on doing it that long, buying a house, don't buy. Continue to rent. That's my old man suggestion for you for today. So what happens again, the markets usually sell off and then that money moves over to the bond market and then the bonds usually do pretty well. Well, that's not actually happening right now. But this is at least the context behind it. Okay, so that's that part of it. The stagflation's back. Basically what this says or means is we have inflation, but the rest of the economy is just dismal. You have unemployment rising. You have the GDP falling. So that is now the ugly word that is in the mainstream media right now. And we're not really going to focus in on that today because we're going to focus in on basically what the bond market's doing based on a lot of this information that we're getting. So I wanted to take a dive into this today. So here's what's happening in the markets right now with the bond markets. Well, here's what we follow every day. We follow normally the MBS market. This is the mortgage bond that trades on Wall Street. Don't really need to follow anything else. Basically, what you're seeing on here, if the price of the bond, or this, what you're seeing on the screen right there here, this is the price. The price of the bond is going down. We don't like that. We don't like it going down because that means rates are going up. So we want this to go up. So here's what's happening right now is people are getting out of the equities and they're not even buying bonds, because here's the 10-year Treasury. Now, here's what I want you guys to focus in on. My concern with the 10-year Treasury is it going to break out above 4.3. Okay, so I just want to show you just a little techie thing that I do in the background. I'll get my head out of the way. But this is charts that we follow. So if you squint down, you could see there's a line down here. You can see it right down here. That would be the bottom of this trending line. Right through here, this should be the average, or one level, and then this is the top. Think of these as kind of bumpers. When you're bowling, ever go bowling, take kids bowling, you got those bumper things. What normally happens when you see these trending lines, bond yields will trade between these. My concern is we go right through here and we break out above 4.3. That is a level. So if we break out to 4 at this level's at a 4.3, the next level that we're going to hit is right up through here, which is a 4.407. There's a 10 basis point move if we go above 4.3. That's my concern, that we pop above 4.3 and then we automatically adjust all the way up to 4.4, causing rates to go up about 1/8%. That's my concern right now. So if we go back to this, we're looking at the bond market through here. It's all over the map. Look at this. When the numbers came in for the unemployment or the unemployment claims, it's all over the map today. So this is really a hard way to trade. I go to the 10-year Treasury and try to figure out what the trends are there. So right now I'm skittish on what rates are going to do. That's why I put out a video yesterday. I put it right through here. If you're a homeowner, you might want to look at refinancing if your rate's above 7.5 right now, basically. And there's a lot of reasons between that, because I don't think rates are going to stay steady right through here. I think we're going to see an uptrend just a little bit with some inflation numbers. And then as the dust settles, you're going to gradually start seeing mortgage rates move back down through. So the economic news we have coming out the rest of the week. Well, here's the economic calendar, initial jobless claims over the last several months. And it's usually ranging right about 220 to 240. You can see right through there, 220, 220, 220, 240. So it was a nice reprieve that we're seeing this week on that. What's coming out tomorrow, now this is the official numbers, folks. We're going to get the unemployment rate coming in tomorrow. Okay, why that's important? Well, these are the things that the Federal Reserve monitors, and that is right in the wheelhouse of what they're looking at, because we had the PCE coming in last week. It came in at 2.5 from 2.6. That's a good number in inflation. But the GDP is now starting to scare me, because if GDP, right above my head, if that starts to deteriorate, it was at a 3.1 handle previously, that starts to deteriorate, I don't know where rates are going to go from there. So that's why I put out that video. If you like rates where they are, folks, I would lock in. Don't know where they're really going to go from here, because when you start looking at models like this, it's really hard to figure out what the trends are. So let's look at a 5-day chart. Look at this run up. This is what I'm saying. When this goes up, rates are coming down. So we had a nice reprieve in rates over the last couple of days. And if you're rolling that dice, I would say this might be the point to look at refinancing. So that's that part of it that we have. And then the last piece of this puzzle, the FOMC rate sheet, or Fed Rate Watch. This is basically, just go to this website if you want. It's called the CMEgroup.com. You can go here. This is basically a chart that tells us what the Federal Reserve is expected to do over the next year. So the Federal Reserve's meeting in 13 days. What are they expected to do? We're going to go through this every day until they come back and tell us what they're going to do next, or 2 weeks from now. Let's get to the aggregate. There is a 93% chance they're doing nothing, because the federal funds rate right now is 4.25 to 4.5, which I can prove to you right there. There's the federal funds rate. And then over on this side tells us the month of the meeting and what the projections are, or expectations are, of them reducing rates. So if you can see right through here, 4.25 to 4.5 on March, they're not changing anything. Now, in the May and June meetings, now that's when they're supposed to start talking about cutting rates. So only time's going to tell in that. But what I don't want you to do is I don't want you to wait for, like people did on the September rate cuts, because we knew the Federal Reserve was cutting rates on September 18th of 2024. They did. They cut by 50 basis points. What happened immediately after? Mortgage rates went up 1% So don't sit on the sidelines, folks, if you're in a home now. But if you're looking to buy, that's another story. So let's get to who I am and what I do. So I said at the beginning of this video, my name is Dan Frio, and our slogan here is one application, one credit pool. We're going to shop your loan over 30 different lenders. Now, how do we do that? Well, first off, I need to do a public service announcement. So right through here, this is optoutprescreener.com. This isn't me. This is like signing up for the do not call list. But what this is, it's saying, do not sell my financial data. Because what happens is when you apply for a mortgage or a car loan, when the financial institution pulls your credit, the credit agencies goes, woohoo, I can now sell this data to other financial institutions. So they'll sell your data off, and then you'll start getting phone calls from people you don't even know. So sign up for this thing. You'll thank me in the long run. So over to who I am and what do I do? So my name is Dan Frio. I'm actually a loan officer in all 50 states as well as Puerto Rico. So no matter where in the country you live, you can use me. Okay, here's the cool thing about us. If you're trying to shop around, well, if you can do that on your own, God bless you. I strongly suggest you do it. But if you really want our help, and our help, really, I'd love to help you because I can get you quotes from me, our bank. So I work at a federal bank, and then we're set up with 30 other banks, credit unions, lenders. We can offer you their programs and their rates. Some of these programs over here have maybe a $6,000 down payment assistance program you can get into. How do you get there? Go through me. Another one is $4,500 and $500 appraisal credit. How do you find it? You go through me. So if you'd like to reach out to me, just go to therateupdate.com. There's 4 different ways to reach us. You can hit the apply now button right up through there. That'll get your application right to me, yours truly. I'll get you on the phone and ask her you any questions that you might have. Go over those, and then we'll get you on your way. But if you'd rather schedule a consultation with me, you can do that right through there, or you can scroll down to the bottom of the website, and you're going to go all the way down here, and you're going to find mortgage calculators and a whole bunch of other things. But when you get to the bottom, you're going to see our 800 number as well as my email address. So feel free to give us a call. Jump in the front of the line at 844-775-5626, or you can reach me personally. Yeah, it's me answering. So just send me an email at dan@therateupdate.com. Be more than happy to answer any questions that you have. Make sure you put in your name, maybe phone number. Love to reach out to you, answer that question, and maybe any other questions that you might have. So thanks for watching this morning. I'm not expecting rates to really do much. It's stagnant right now. Let's get to the bond market and the mortgage bonds. You can see it's really volatile today. We started up and then down and then up, and now we're on a trajectory going back up. So again, all you need to understand with all this is if this number is up when it comes to the mortgage-backed securities, because the reason for that is this is the price of the bond. So if the price of the bond goes up, yields are coming down. But you got to be careful because if you look at the 10-year Treasury, it's actually going to give you the rate or the yield right through there. So be careful when you're looking at those things. But otherwise, I'm thinking mortgage rates are just going to be stable right through here until we have just more information coming in, especially the unemployment rate coming in tomorrow. So that will be big news. But that is to conclude my video for today. So if you like the videos, please, all I ask you to do is one thing: subscribe down below. Give me a thumbs up. Would love to have you as a subscriber. Otherwise, have a fantastic afternoon, folks. And I can't wait to see you back here at the closing bell to let you know how this mess ends for the day. Thanks for watching. Take care. Bye-bye.